U.S. President Donald Trump following through on his threat to hit Canada with wide-reaching tariffs. Derek Burleton, Vice President and Deputy Chief Economist with TD Economics, joins us now to discuss the potential impacts on our economy. Derek, great to have you on a day like this. It is a fast-moving file. It is fluid. Let's take stock of where we are right now. It was a pretty eventful weekend. We had a tariff announcement from the States, a Canadian reprisal. Where are we?
Yeah, well, actually, I would say Friday was when things really got interesting. Just the various rumors and the sources, and within minutes, Trump, rejecting what a source had said. So, this is kind of the world we live in. Is that a lot of trading is going to happen on speculation, and I don't think we're going to see immediate end to that. So, yeah, I think where we are today, we are holding out some hope. Trudeau speaking to Trump this afternoon that maybe he will roll back some of the tariffs. I'm not holding my breath, but certainly that would be good news. And meanwhile, at TD Economics, we're really starting to sharpen our pencils in terms of what this is going to mean to our forecast. A little bit pandemic feel in that you're in this world of real uncertainty on forecasts. Forecasts are in a state of flux, whether it's the economy, unemployment, interest rates, the Canadian dollar. So forecasters are going to have to really start thinking about, for example, duration, how long these tariffs could potentially remain in place. That will be, I think, the number one variable. But unfortunately, there's not a lot to go on at this stage. It's all, as you pointed, very fluid and in flux.
Yeah, that was the big takeaway I had when I read the TD Economics report that came out, I believe, on Saturday, right after we had a bit of certainty, at least, on an announcement. Duration was the big question overhanging us. We don't know how long. They haven't kicked in yet, how long they could be in place for. You did run some scenarios, though, in terms of potential impact on the Canadian economy. And if we did have this drama stretch out for a while, obviously there would be some pretty substantial impacts.
There would be, and the way I'd characterize it from a high level, and you can include the U.S. on this, that tariffs, particularly tariffs this steep, impose a stagflationary impact on both economies. But whereas in the U.S. it's probably more of a inflation issue, in Canada I think there's more potential for stag than inflation. So that's kind of our general thinking. Yeah, I think when we do some high-level analysis, if tariffs of 25%, 10% on energy are kept in place for 2 quarters, then I think we are looking at the economy, Canadian economy, tipping into a mild recession. The longer beyond that it stretches out, then you can get deeper impacts, more prolonged impacts, long-term impacts on the economy in terms of destruction to long-term outputs. So the effects are very big. I think on the 2-quarter impact, where you're in a mild recession, as mentioned, you would get higher inflation, but not dramatically. I think where we will need to think more about is in terms of how much of the inflation gets absorbed by producers, how much gets passed to the end consumers, and we'll see if there's any kind of increase. I mean, Trump by no means has said this is it. So we'll have to kind of be very nimble in adjusting our call as we go forward.
That makes it obviously a tricky path going forward when the news keeps changing, the conditions keep changing to make forecasts. But, we have you on, so we're going to ask you things about the loonie. I mean, it pulled back pretty sharply, like other asset classes. It's come off the lows. But at the same time, when I was going through that report, if this is prolonged, obviously it will weigh on our currency.
It certainly will. I see a currency where the risks are pretty much in one direction. The question is how deep, and certainly conceivable that currency could move to 65 U.S. cents or even lower. We've had an all-time low closer to 62 back in the late 90s. So, that's significant, albeit some of that is priced in already. We saw a bit of a bounce this morning. So I'd say 65 is probably an assumption if these tariffs are sustained for a few quarters at least. And, but that's huge. And that will increase some of the inflation impacts on Canada, even if output really suffers. And this is what will put policymakers in a real box.
We just heard from the Bank of Canada last week. They delivered another rate cut, 25 basis, more standard size rate cut. And going forward, uncertainty. I mean, what does this mean? And we don't even know how long we're going to be in the situation. But what does a central bank do with all this?
Well, the central bank, I mean, they gave us kind of a framework last week where they see the two-sided impacts, where you're going to get inflation rising, which is all things equal, leading to a Bank of Canada would have to set even higher interest rates, and an economy that's going to struggle. So, as noted, puts them in a bit of a box. I think what they're saying is that it's going to be something they're just going to have to monitor. They're not sure about lags, which gets hit first. My guess is it's GDP that struggles, and inflation may be a bit lagged overall. It'll take a little while to see some of the pass-through. So that might provoke downside in interest rates. I think where we're ending up with this, at the very least, you're going to see kind of 4 quarter-point interest rate cuts for this year as a whole. You've already seen one. So, 3 additional quarter-point interest rate cuts. And again, could be more. It depends on, how GDP responds relative to inflation. But I think, again, like the Canadian dollar, it gives you kind of a rough approximation as where we would see rates going in Canada. Longer-term rates probably won't fall as much. It'll depend a bit on flight to safety, but we don't see as much scope for those to move down.
I know from going through your team's research as well, when we talk about what it could mean for the Bank of Canada, we also have to figure, would there be fiscal stimulus from Ottawa, from the provinces, and then that enters the calculation and perhaps even make it tougher to try to figure out where we might be. Would you expect fiscal stimulus from Ottawa and perhaps some of the provinces if we remain in a prolonged trade dispute?
Absolutely. They're already making clear they're priming the pump. They're even talking about dusting off some of the pandemic programs. So there will be stimulus. I think, again, they haven't given any kind of real idea as to how much. So we're going to have to make some assumptions around that. It will mitigate some of the downside impacts, along with a declining Canadian dollar as a shock absorber, and it'll take some pressure off the Bank of Canada to respond. I think one thing the Bank of Canada will be looking at is governments to be that first responder, and that they will be there to kind of, adjust their interest rates to provide additional support if need be.